Thank you for choosing to watch this video. I hope it explains what life insurance is really all about. And please remember that you can email me with any questions, no matter how silly they may seem to you. Life insurance is not fun to buy. You cannot wear it, or eat it, or decorate your house with it. It forces you to think about your own death, and that's something nobody likes to do. So as a result, life insurance is sold and not bought by people. The aim of this video is to explain why we need life insurance and how simple and easy it is to go about working out how much you need and how to get it all online. South Africans don't enjoy state social security benefits like other countries, so each of us needs to provide cover against death and disability for ourselves and our families. We also need to realize that life insurance companies do need to make profits. So those companies that put the needs of their clients first are the ones that are likely to succeed in the long run. And that's the reason why I only promote a few of these top life insurance companies. Whilst it's true that not everyone needs life insurance, if you earn an income, you need to protect that ability to earn that income, should an illness or an accident prevent you from doing so. And if you have someone who relies upon you for a living, you've got to have life insurance. If you don't have someone who relies on you, you certainly need to look after yourself and have disability insurance. It's that simple. You may say, well, I don't need it, but can you say that your family won't need it? The major causes of death are heart disease and stroke, cancer and trauma, which includes accidents and crime. Trauma shows that the need for life cover is not age dependent. Death can strike at any time with a significant impact on the lifestyle of your loved ones. So it's your responsibility to ensure that should something happen to you, their lifestyle is not compromised. If you have a partner, children, aged parents, employees, or a disabled person who relies upon you for a living, you need to ensure both your life and your income earning potential. It's the right thing to do. You know, some wives might not believe in life insurance, but widows always do. Perhaps you are helping to pay for your brother or sister's university studies, or you've got a guaranteed car or personal loan. If that's the case, you need life insurance. Because if you were to die suddenly, the people you're helping and caring for may find themselves facing a very dangerous financial situation. In addition, the value of your estate will be dramatically reduced as the assets that you spent your lifetime working up and building up are used to pay creditors and settle outstanding debts and taxes on your death. So your heirs will get far less of an inheritance than you would ever want them to. Many South Africans are finding themselves in what's called the sandwich generation, where they're supporting both elderly parents and older children. This generation of 40 and 50-year-olds is finding it very difficult to provide for their own retirement whilst at the same time meeting family obligations such as elderly parents who don't have sufficient retirement savings, or children who stay at home a lot longer and study a lot longer, or even unable to find work. Taking out a life insurance on a parent that you are currently supporting is one way that you can ensure that you can break the sandwich generation cycle so that your children don't have to support you in retirement. Or, if you have a parent who already has a life policy in place, you can simply take over that premium rather than see it lapse because they can't meet that monthly payment. Please also remember, you can keep your beneficiaries secret. If you don't tell anyone who your beneficiaries are on your life policy, nobody else will. So you can feel very secure when you invest in a policy. It's not only employed people who should have life insurance cover. If you stay at home and provide services such as cooking, cleaning and childcare, you are making an enormous contribution to your family. If you were suddenly removed, those left behind would have to make alternative, very expensive arrangements in order to keep the family functioning. Yep, the only thing worse than a home without a mother is a mother without a home. Without the financial means to cope with your loss, the impact on your family could be devastating. They may be forced to move to a more convenient location that is closer to their schools and facilities. In some cases, there may be no option but to enroll your children in a boarding school and to cut back on the facets of their lives that they are used to. Because no doubt about it, the most valuable asset that a father can leave his children is their mother's time, and life insurance will guarantee that your children will have that time. Losing a father is bad enough, but inheriting a part-time mother can even be worse. Older couples also need life insurance to protect the surviving spouse and ensure that savings and retirement funds are not used up by unexpected medical or other expenses. If you are disabled and not earning money, there are some risks that you can afford to take yourself, such as the risk of buying a motor vehicle that you may not be able to keep the payments up on. But you can't afford to take the risk of not being able to provide for your children's education in the event of your disability or your death. Life and disability insurance is the only way that you can guarantee you can pay for your kids' education. This is what life insurance is all about, sharing the risk with others. Millions of people pay into a pool of funds, and if bad luck comes your way, you draw money from that pool. If you're lucky, you will never have to draw from the pool or claim a benefit. And not claiming a benefit does not mean that you've wasted your premiums. It means you have enjoyed many years of peace of mind, knowing that both you and your family would have been left destitute if the unexpected had occurred. You can always add a savings part to your premium, and guarantee in the future that you get something out of your policy. But be careful of choosing life insurance that offers you a cash back payment. Not only will you pay higher premiums, after all it's your money that pays for that future cash value anyway, but as your life insurance risks change over time, you may well find that that policy becomes so expensive in your later years that you cancel it and lose out. And on a claim, the cash value is not added to the sum assured of that policy. But I believe you would do way better if you saved that extra premium separately into a unit trust. So talk to me about this idea, because it can be very rewarding for you. Hopefully you've now decided to investigate life and disability insurance further. Because you cannot predict the time of your death, the best time to get life insurance is now, today. The earlier you start building up life insurance, the better, because it becomes very cost effective. You pay a lot less, and in the future your premiums will be a lot less than those who buy life insurance at an older age. In addition, if you are young and you're still in good health, you'll not be penalized because of extra risks associated with certain conditions that you might develop later in life. Who knows, you may even become uninsurable. What will you do then? Once you have cover, no one can remove it if you meet your premiums, no matter what happens to your health. A healthy young person who doesn't smoke or engage in hazardous sports like skydiving is going to pay less each month for the same amount of cover than someone of the same age who does those things. Premiums go up with age. A 40-year-old is going to be paying more than someone in their 20s. Life insurance is a competitive business. So certain life insurance companies do offer incentives to their prospects. Incentives such as offering lower rates for smokers who are prepared to quit smoking. The amount of life insurance people need varies by age and individual circumstances. And I'm here to help you work out the right amount of life insurance that you need, so that you don't waste premiums on cover that is not necessary. The first step is to allocate a comfortable monthly amount that you can pay as a premium. Most life insurance policies start from 200 Rand a month. Just think, for less than the cost of a cup of coffee per day, you can be covered and protect your loved ones. Premiums are determined by age, state of health, lifestyle, hereditary factors, and a host of other factors. The amount of cover is determined by the premium you pay. However, it's critical that you at least maintain enough cover to pay off your debts and to provide enough money to replace the income that you're now contributing to your family if something happens to you. Leaving your family with debts they cannot settle will put them in severe financial difficulty with dire consequences. And life insurance, again, it's the only way to guarantee a future amount of money. It will give you peace of mind and cost you a lot less than you realize. Just get a quote from me and see. Next, you need to quantify how much cover you should actually have. Remember, not having enough life cover is just as dangerous as having no life cover at all. The amount of life cover needs different from person to person and will be influenced by a variety of factors. These include your age, whether you're married or not, if you have children, how many children you have, and your outstanding debts and your current amount of money that you're earning. Potential tax commitments, including estate duty, capital gains tax, outstanding income tax, as well as other costs such as funeral costs, need to be taken into account when you work out how much life cover you need. Maybe instead of looking at a large sum of money, you should rather look at what your dependents need to live on. We can work out how much money will provide that monthly income, how long it will last your dependents, taking into account inflation and their future expenses. Usually a person takes out a policy of between 6 and 20 times his or her annual salary. That policy should also take into account any outstanding debts like home loans and vehicle finance. So if you were earning, say, $200,000 a year, you should have a life policy of at least $1.2 million and salary protection for at least $12,000 a month. I have never met a widow who said her husband had too much life insurance. How much would your partner sue for if you were killed through the negligence of a large company? If that's the amount you think you are worth, then that's how much life insurance you should have. So do yourself and loved ones a favor, get a quote now, and I can help you do just that. Find an affordable, low premium, comprehensive life insurance and disability product. And I can get you cover in just 6 clicks of your mouse. Inflation also needs to be considered when you determine the amount of cover you need. The cost of living goes up every year, and while $1 million now might be enough to support your family, it's certainly not going to be enough in 5 or 10 years' time. And you may want to leave a legacy or an inheritance. Most of us would like to be remembered when we're no longer here. Well, as I said earlier, life insurance is the only way to provide a guaranteed lump sum of money in the future when you're not around. You'd give your life for your children now, so why not insure it for them today? Before you buy a life insurance policy, simply because it offers the lowest premium, be sure that you understand how that policy is priced and what premium increases you're going to face in the future. Steep premium increases during the term of your policy or when a guaranteed premium term ends, or if you renew the policy in the future, may make a low premium offer today become very unaffordable 10 years down the road. Life insurance companies have different premium patterns in a bid to ensure that there is a policy that will suit every pocket. Although this may help those now who could otherwise not afford life cover, it has a nasty surprise for those who are unaware of just how the premium patterns will increase in the future. This is a major threat for those who buy insurance directly from companies and don't use a financial advisor. They don't discuss that with you. It's extremely important to know what your future premium increases are and how long the premium is guaranteed for, and whether that company has ever changed their guarantees on their premiums. And if your premium is linked to your health or your medical aid, will that company use any future ill health to increase your life insurance premiums? You need to find that out. How's a claim paid out? Well, you can have it paid as a tax-free lump sum to a beneficiary, and if you feel that beneficiary cannot control that money because they're too young, you can have it paid as a monthly amount, just as though you were alive and providing your salary to them. Or you can have it paid into a trust where trustees control the money and the payments. What medical tests are called for? In most cases, a simple blood test is all that's required, and I can send a qualified nurse to do it and see you in privacy. No one close to you ever sees those results, and they're all paid for by the insurance company. If you are still concerned about life insurance medicals, you can always look at an accidental life and disability insurance, because there are no medical tests with that policy. Cover only pays you if you die or you are disabled as a result of an accident, not an illness like cancer or kidney failure. And remember that 55% of claims, that's almost half, are due to accidents, so it's not a waste of time to consider this type of cover. 5 good reasons to get a life insurance. Number 1. Do you have a bond, car repayments, or a credit card? Life cover will pay these major costs if you pass away, and your family will never have to pay them. 2. You're young, fit and healthy, no ailments. This is the best time for you to get life insurance as your premiums are low. If you develop health issues later in life and cannot get life insurance, it will not matter as you already have cover in place. 3. Are you married? You love your partner, so make sure they never have to worry about money should you pass away before they do. And make sure they protect you as well. Number 4. Do you want to leave an inheritance? Life insurance is the only way you can guarantee a future payment when you die. Number 5, your peace of mind. If you suffer a disability or dread disease, your life insurance will pay out a lump sum, allowing you to fulfill any dreams that you've not yet achieved. It's such a sad fact that most families will not be able to maintain their standard of living after the death or disability of the breadwinner. And that's only because so few breadwinners will have taken out any or enough life insurance. It's such an easy thing to prevent this from happening to you and your loved ones. At different stages of your life, you'll need to have different risk assurance products and different benefits. You constantly need to revise what and how much assurance you require. particularly when your circumstances change, such as a marriage or the birth of a child, or death of a partner, divorce, retirement, or even a pay increase. If you don't revise your risk assurance regularly, it's highly likely your cover will be outmoded and incorrectly priced and will never meet your needs. You need to ask these important questions. Who am I buying from? You need to know that you're dealing with a credible insurer with a good track record when it comes to claims and client service. And you should also ask your advisor about their credentials to ensure you're dealing with a reputable member of this industry. There are different types of insurance policies, things called term and whole life. They're the most important of the life insurance policies. A term policy provides cover for a specific time period and can provide you with accidental or natural death. It has the lowest premiums. You can have a problem if you wish to extend the term. A whole life policy terminates when you die. If you're unhealthy or you work in a high-risk occupation, you may have an exclusion or a loading of your premium. A loading is simply an additional charge on the premium because you're at greater risk than, say, a bank manager. An exclusion is an additional clause that's applied to your policy and means you're not insured for a particular thing. That could be due to a dangerous hobby such as cave diving or an existing medical condition such as diabetes or even depression. You need to make sure your cover increases over time. As I said earlier, a 1 million rand death benefit may seem enormous today, but in 10 years from now it will be worth a lot less after an adjustment for inflation. Just look at what your money buys today compared with, say, 10 years ago. What happens if you can't pay the monthly premium? Policyholders who can't pay their premiums typically have a 30-day grace period. But some insurers also sell add-on protection for these times. They'll carry a few premiums when you cannot meet the payments. These events include death of a spouse, divorce, hospitalization, retrenchment. I can show you a series of products provide comprehensive cover against a wide range of risks. You can tailor your cover to suit your individual needs and your circumstances at your different life stages. You need to protect your family's lifestyle should you pass away, and life insurance is the finest gift that you can give them. So protect your financial future should you be unable to work as a result of a disability or an illness as well. Remember, people buy life insurance not because they may die, but because their income will die. And lastly, how do you know that this is not the last life insurance offer or video that you will ever read or see? Please, I urge you, just get hold of me for a quote. See what it will cost you. You may be pleasantly surprised. You may be pleasantly surprised.